You're listening to the My Simplified Life podcast, and this is episode number 36. Welcome to the My Simplified Life podcast, a place where you will learn that your past and even your present don't define your future. Regardless of what stage of life you're in, I want you to feel inspired and encouraged to pursue your dreams, simplify your life, and start taking action today. I'm your host, Michelle Glogovac, and I'm excited to share my stories and life lessons with you while taking you on my own journey. This is My Simplified Life. Hey friends, welcome back to another episode. I'm your host, Michelle Glogovac. As you know, I launched my business just under 2 years ago, and there is one thing I did at the start, and it's something I firmly believe you should do when you launch your business. This one thing is something you should do regardless of what stage you're in business because it is so important. Get your finances in order. If you aren't sure where to start, then worry no longer because my guest today is a California licensed tax preparer and IRS enrolled agent. Mike Ball has an extensive background working with small and medium-sized businesses, providing strategic tax planning advice, tax preparation, and accounting services. Not to mention, he's one of my wine happy hour friends, and I personally think he's a wealth of knowledge that you need to hear from. We are talking about getting set up with your finances and keeping track of them, how to ensure you're making your quarterly tax payments, write-offs, and how you really shouldn't be fearing the IRS. I'm not a numbers person, but I do love knowing the numbers in my business, and this conversation is an important one that you need to hear. I know you're going to learn a thing or two, or maybe even more, after listening to all that Mike has to offer, and I'm excited to learn what your takeaways are. Unfortunately, we didn't drink wine during this episode since it was early in the morning, not that that's an excuse, but that doesn't mean that you can't sit back and have one while you're listening. It's time to start talking finances and taxes for your business friends, and let's make sure that you are IRS ready before your next payment is due. By the way, that's July 15th. Hi, Mike.
Hi, Michelle.
I am so excited to have you on today. This is I don't know if it's better than what we normally do together because happy hour is pretty awesome.
Yeah.
And today there's no wine involved, so that's kind of a bummer, but
Yeah.
I'm excited to introduce you to my audience. So can you please let them know who you are besides one of my happy hour friends?
Thanks. Yes, Michelle. My name's Mike Ball. I'm a tax preparer and compliance professional. I've been in the doing taxes and business services for about 20 years. I spent a little time doing insurance and investment compliance for a couple of insurance companies. And now I'm, out on my own with my own firm, and I'm happy to help.
That's exciting. So you're a numbers guy. You obviously like that because I am totally not a numbers person. Like I picked a major in college so that I didn't have to take but one math class. So for people that are, a lot of people are just starting out their businesses, and we'll touch on a little bit later, especially starting out right now in the midst of coronavirus. But what should somebody do who's about to launch a business? What are some best steps and practices, especially coming from someone who is a tax professional? What can we do so you're not pulling your hair out when we come to you at tax time?
Yeah, it's a good question. I've been asked that question a number of times, and I think the most helpful thing I can do is tell you to no matter what you do, save 15% of your gross receipts. That means every $100 that comes in the door, you religiously put away 15% because you're going to have self-employment tax. Self-employment tax is the equivalent of Social Security withholding if you're an employee. And what happens is, even if we get through tax deductions, get your regular tax down very low, we've got about a 14% tax on top of the net income from your business. That is unforgivable. That's something that's very important. Save that first 15% because you're going to have to pay for it. The other thing, another point I'd like to point out is if you If you decide to get an entity, if you could decide to incorporate or do a limited liability company filing in California, you got to keep that stuff completely separate. You have to pay close attention to the fact that you set up an entity, and it's a separate person, separate from yourself. You want to keep the money separate, and you want to actually have a handshake between yourself and your corporation. In other words, you don't mix things up. You don't pay bills, corporate bills with your personal, and personal bills with your corporate. Very important. The next thing is to save official copies, confirmations. So if you get a federal tax ID for your entity, you want to save that. It's called the form SS4, and SS4 is both the application for the identification number and the confirmation that you received the identification number. You can't do anything without that. And it's really good for you when you get that, is put it away and know where it is and make a bunch of copies of it so that you can use it when you open bank accounts, when you pay your taxes. The last thing is keep track of what's going on with your business. Keep your books regularly. And whether you use a system that's automated or whether you just have a nice notebook that you open up and make notations in and save receipts. Very important, because when you get to the end of the year, if you've had a really good year, but you don't have receipts for any of your expenses, how are you going to show you spent money? That's important too. And I guess the one last thing I want to point out to a beginner is, and this confounds everybody, the extension to file your tax return is not an extension to pay your taxes. Taxes have to be paid timely. Otherwise, the interest and penalty clock starts ticking and you'll owe penalties. I have some clients that owe as much as an entire car payment in penalties because they didn't want to make their estimated tax payments. I have one client that she could buy a whole car with her penalties from not making her quarterly payments. So that's something that's very important, and almost nobody understands that and really takes that to heart when they're looking at their business.
And something I want to mention too, and you can agree or disagree, but I find that when you talk to your tax preparer, your accountant on a regular basis, that helps. So for myself, I check in before every quarter ends and say, here's my P&L, here's what I've done, here's what I think I'm going to do. What should I pay? So talking to you throughout the year is probably more beneficial than just coming in January or February, isn't it?
Yeah, absolutely. Absolutely. I have two types of clients. I have clients that I don't know if I'm going to see them next year. And then I have clients where I'm in touch with them almost monthly because they're doing something. Hey, I'm doing this. Hey, Mike, I want to hire somebody. What do I do? Hey, Mike, should I lease or buy a new car? Things of that nature. And it kind of gets them in the habit of finding out what's real and what's just, urban myth about things. And it really puts you on a better footing. So I commend you for doing that, Michelle.
Yeah. Well, I think between having that good open communication and then, as you mentioned, keeping track of everything, I'm a fan of QuickBooks Online. So that to me is like my best friend because I put my credit card is linked to it. My bank account's linked to it. So I literally don't have to think about it unless I want to, recategorize the expense and do my invoices. But wouldn't you recommend setting something like that up versus having a bunch of paper receipts or just not tracking it at all?
Yeah, absolutely. I do a lot of work in QuickBooks. And again, it runs the gamut of whether, a guy says, my head's going to explode here, do this for me, versus tell me what to do and I'll do it myself. So anywhere you find yourself in that spectrum, I think a good automated bookkeeping solution is going to work for you. I'd caution, because I have clients in QuickBooks for 15 years now, and some of the things they did wrong when they first set up are still biting them. So it's something where it's quick, but it's not necessarily easy. You have to pay attention to what type of what type of categorizations you use on your accounts. And you do still have to reconcile to find out where your money is. There are accounting functions that are facilitated through QuickBooks, but you still have to pay attention. So yeah, I
Definitely. Yeah.
recommend that.
And then when it comes to paying your quarterly tax payments, I know that there's some different ways that you can do it. One would be like what I do, where I talk to my tax preparer in advance, but then you can also kind of prepare for it based on last year if you've been in business, right? With the slips that the IRS gives you.
Yeah. Well, what you do for estimates is, if you have a very dynamic business and all the quarters don't look alike, you might reach out to your tax person and say, here's where I am, what should I pay? There's a safe harbor, which says if you pay at least as much as 100% of prior year tax, you don't have any estimated tax penalties. So it just depends on how dynamic your situation is. A lot of times, generally, we do a protective estimate, and we assume that you'll make as much in the year we're sitting in as the year we just finished, and we just pre-calculate the estimated payments the same as you would have paid in 2019 or into the immediate prior year. That way, at least you don't have any penalty. And then if you have a really good quarter, make a windfall, get a big contract, whatever, then we adjust that number. But typically, yeah, it's something that you can count on, because every year is a snapshot of where you are, and all those snapshots in the lifespan of your business make up a movie. Okay, but in each year is a snapshot of where you are and what you owe and what you make, basically. And if you can project into the future, but you're the business owner, you know what's coming. You know, if it's going to be good, or you know if it's going to be bad, and everybody kind of knows where they're going to end up. I remember making some uncomfortable calls years ago where I did the estimated tax for a self-employed guy, very successful self-employed guy. And my number, he was going to have to pay $1 million in estimated taxes. Oh. I was sweating. I was dreading the call. I was like, he's going to freaking kill me. I've never met this guy in person. He doesn't know me. And I'm going to call him and tell him he has to send $1 million. So I called him up, and I hemmed and hawed, and I got through the call. And by the end, I said, well, so your estimated taxes, and I just blurted out, it's $1.5 million for federal, and then another $850 for California. And he goes, well, that's what I thought. So you know what your business is doing. You know what to expect. So estimated taxes shouldn't really be a shock to anyone who's in business.
And if you owe $1 million, then chances are you're making quite a bit more.
You probably made 4 or 5.
Yeah. So if you told me I owed $1 million, then yeah, I'd be crying and digging a hole.
I've been hoping for that $1 million tax bill for a long time. As long as it's not like Willie Nelson $1 million tax bill where all the money's gone. He's got a guitar and a pickup truck, but that's all. Anyway, so you shouldn't fear that, but that's where you're living now, being a self-employed person. Something else I'll mention is, even if you're not aware of a compliance issue, like with a state tax or a city tax, or not city tax, but a county tax. In Santa Clara County, we have a personal property tax for people who are in business. And even though you're not aware of it, you're subject to it. So you don't be surprised when you get that notice and you read through it, and in the initial ire of getting a nasty gram from a tax authority, once that's over with, you just got to accept it and say, okay, here's what they get. I gotta pay this too. And then next year I got to plan for that too. So
in planning, can we talk about write-offs a bit? Because my backstory with write-offs is I worked from home for a long time before being self-employed. I did my own taxes. And when Ted and I got together and got married, and I was approaching, I was doing our taxes, and he was like, "You can't write all this off." I'm like, "Sure I can." It's like Seinfeld, the whole, what is a
I
write-off and
write
what
it
do
off.
they do? Yeah.
I just write it
And
off.
that's why we got a tax person, because he thought I was writing off too much. And it turned out I wasn't writing off enough. So
Yeah. Yeah.
let's talk about that, because I am a big fan of the write-off. I mean, everybody should be. But, what are the guidelines that we can go about when it comes to write-offs?
Well, it's a good question because a lot of people feel guilty, or not guilty, but they feel hesitant to take a full deduction for something. What you have to understand is, in business, if there's a business purpose for it that's not frivolous, then it's acceptable write-off. If the law says, the code section says you can write off depreciation, right? Which is basically it's a financial benefit for the decreasing useful life of an asset. And let's say certain things are depreciated at a slower rate, and some things are depreciated at a faster rate. And there's this thing that came in play a couple of years ago called bonus depreciation. And bonus depreciation, the default is 100%. So it's almost like an entire write-off of a useful asset in the first year. So you buy a new computer, it's subject to bonus depreciation, and whether you have net income left or not, you can take the deduction for it. And if it puts you in a negative situation, you can carry the negative to the next year. That's just how it works. And people, you hear about that and go, "How can I do that?" I says, "Because it says you can in the law." It does. Some other things are limited. I think perhaps more. We talk about the home office deduction.
Yeah, that's a big one. Hit
Yeah.
that.
Well, that's a big one, but there's not really much to it, because if you own your house, you're paying mortgage interest and property taxes on the house. You're already getting a Schedule A itemized deduction for those expenses. So for somebody who owns their house and has a home office, you have a dedicated amount of space. So it's got to be a room with no TV in it, basically, where there's nothing but business going on in that room. And then that percentage of your total house is tax deductible. But when you're thinking about, that's maybe 5 to 10% of your house, it means the rest of those expenses are going on Schedule A on your itemized deductions anyway. So it's really not a big deal. And then people will say, "Well, yeah, but I got a gardener, $100 a month. Yeah, but I got a housekeeper." Well, you're still only getting 10% of those annual costs that you can write off against your business. You can take depreciation, but only on the portion that is your dedicated office. I think where home office really pays off is if you're a renter, because you're not getting a tax deduction for the rent you pay, but 10% of your annual rent's pretty good for a tax deduction for somebody working in their back room. So that's a good example of a not very well understood tax deduction.
And then what would you say to someone who takes so many write-offs, deductions, that they end up negative? Like, when does the IRS start actually looking at that and going, "Wait a second, you're taking all these write-offs, you're negative every year." Like, at what point do you need to start bringing in something in the positive before they start flagging you?
Well, it's a good question. I think if you show no net income for more than 3 years out of 5 years, they may write you and ask. They may refute the deductions and tell you have a hobby, not a business. So we'd be very, very careful when we're doing tax return. Now, if you have losses in a couple of years in a row, we shouldn't at all be shy about taking those deductions, because that's what the law says we can do. However, there's a term that I like to use that is something to live by, and that's called audit proof. We want to audit proof that business, so that if we're approached by the IRS with a nice, friendly letter asking to see our records, called an audit,
I'm
Um,
sure that that's a friendly letter
it
everybody wants
is.
to get.
These people have no animosity toward us. It's like, hey, you just owe the money. That's all. They're not mad at us. You just owe the money. Then we want to make sure that the record keeping is above reproach. And that way, even especially in a down year where it's like, oh crap, my big machine broke and it costs $20,000 to repair. And it's not an upgrade, it's a repair. So that's a bona fide business expense. Well, and that put me in the red in the same year you all audited me. However, here's the records, not just a report on QuickBooks. However, the receipts that match the report on QuickBooks. So very important to keep all those receipts so that if we're ever called in to the office, or sometimes they do a letter audit, they send you a letter and you have to respond to the items in the letter timely, or they find against us. So that's another reason to never be afraid of opening an envelope from the IRS, because there's a the tiger trap in there that if you don't respond, you lose. You lose the audit. So that's important to keep in mind.
So,
Um,
at what point would you recommend someone get the help of a professional, whether they're starting a business or not? Maybe they don't even have a business. Like, at what point should you have someone else besides, doing like a TurboTax on your own?
yeah, so small business owners should probably not do their taxes on their own, because there's so much you can get wrong. And I'm finding so many people, especially, here's a good example. 3 years ago, the Trump administration passed a tax bill, and it had some tax cuts for people. It had some tax cuts for companies. It had some elimination of some tax deductions for a lot of people. And these people were really, really badly hurt by the elimination of the state tax deduction. So we had guys that used TurboTax for years because they're computer guys, and they know everything because they can just get a piece of software and be just as good as anybody else. No animosity, and they really got taken for a loop on the new tax laws, because they didn't understand that the $100,000 that they were deducting in state tax was now no longer deductible.
Mm,
And they were cutting big checks to the IRS. And they continue to do so because they're not doing the proper planning up front to make sure that that's covered. So, yeah, you do your own business yourself because you know your business, but you're treading into some water that gets deep quick with self-employment, and you should probably at least go see a guy once a year and decide whether you need more than that based on what they do for you. And there's a lot of factors that go into determining how much help you need from a
sure.
professional. But the thing is, if you're convincing your customers that you're really good at something and they should trust you, but then you're doing this very important razor's edge function called accounting and taxation on your own business, but that's not your business, you gotta rethink those steps, I think.
Sure. Yeah. Now we're in the midst of coronavirus. We're on day like 100,000. It's like 3 months now.
Yeah.
So what do you have for that? I know there's, small business loans that have been going out. There's the employee payroll protection plan.
Mhm.
None of this stuff am I familiar with because I have some, subcontractors, but this is not something that I have to actually dig into myself.
Yeah.
But can you share a little bit about what's going on what people might need that are listening?
Yeah, certainly. It's cool. It's funny because I'll give a little short background. In March, when there were two acts, the Families First and the CARES Act, and the result of which put us where we are now. The IRS decided in early March that they were going to extend the tax filing deadline and the tax payment deadline from April 15th to July 15th. That's never happened before. And And then soon after that, the states were issuing shelter in place. And wow, that applied to people who work for the IRS too. And there's about 60,000 workers at the IRS across the country. It's a big number. And a lot of their campuses look like corporate campuses. And there's literally thousands of people on the phone, thousands of people processing information, taking checks, crediting things. If you think about it, the IRS has more paying customers than any big company, because about 1 million, well, no, more, 100 million people are paying taxes. And that's a low estimate off the top of my head based on the population of the US. So they have business with everybody they talk to. So it's a big company, and for them to just go home, take the phones off the hook, they went home. They're starting to come back over the past couple of weeks, and I think it's going to be a big issue when they catch up to the truckloads of information they have to process. We're gonna have to be on top of that. But so that's the background. Then what happened is they stopped the deadline. They moved the deadline to July. They also they worked in conjunction with the SBA to put certain disaster type loans out there so that small business could get the cash they need to keep their businesses humming. And they also included a lot of payroll tax credits that small business owners could take to help cover the payroll taxes for the employees that they did keep during the shelter in place and what have you. And it seems like for the past 2 months, all I've been doing is either training or talking about the CARES Act, the payroll protection, paycheck protection program, and the other tax credits for small business. Now, this is important for businesses that are already in effect. And just to give you a sense of scope, the Internal Revenue Service sees a small business as any business with less than 25 million per year in gross receipts. So when you and I say small business, we have our own small business in mind, where if I got a guy doing 5 million, he thinks he's pretty good. But these are still considered small businesses. Now, a lot of this CARES Act and Families First won't affect you too much as if you're just starting out in business. You may or may not know what the federal unemployment guideline is, where they're paying out $600 a week through the end of next month to anybody who's on unemployment. So that swelled the unemployment rolls, simply because, hey, more free money. That's great. We need free money now because I'm not getting any other money in the door.
Mm-hmm.
So it's not a bad thing at all, but it did. I think that a lot of our unemployment right now is going to go away as soon as we're fully cycled up, and it's going to be a little more painful to cycle up than we had imagined, but we're going to be in better shape. Most firms, like tax firms, accounting firms, law firms, they're all working remotely now, and the smaller firms they're reinventing themselves. I see it all the time. And that's probably the best thing you can do as a small business owner is you got to reinvent. And I'm probably preaching to the choir here because you're on the street, you're trying to keep your business going. You've already done some reinvention, just basically to keep the money coming in, to keep the customers calling. So I don't know, there's not a lot in terms of all the technical stuff that's been pounded into my head the past couple of months regarding the CARES Act. Not a lot I can give you that would be of use besides me hearing myself talk. So I don't mind that, but it's not useful at this point.
Yeah, I appreciate that. And yeah, pivoting in business, I think right now is very important. And I've been very lucky in that I thought that, podcasting in general, we'll see it plummet, right? And quite the opposite has happened.
Yeah, we're all learning things now.
Yeah.
And being surprised on a daily basis, like, oh, crap, I would have never thought of that. I didn't think that could work. And now it's a new stream for me,
Yeah. It's been an interesting, eye-opening time, and, both good and bad, for sure.
Yep.
Well, I think this has been wonderful. You've given a great amount of knowledge, and to be talking taxes, I got to tell you, Mike, it's been much better and more entertaining than I could have imagined.
Gosh, thanks. I like it.
If only we had some wine while we were discussing it, but it's not even 10 a.m. yet.
Well, I'm a compliance guy, so compliance tickles me. It's weird, but I just find people who need that, and then it's my search for new clients is people who take it seriously and will do the things that they should be doing and not just, telling me tales of woe because they didn't. So,
yeah. And to me, this is one of the most important aspects of having your business is just to get this stuff right, get your finances in order from the start, because it's so much easier to set it up than it is to go back and redo it and, figure out all the mistakes that you made. Just do it from the start.
Yeah, I agree.
Can you please share with everyone where they can find you, especially if they would like to work with you?
Certainly. Love to. Again, my name is Mike Ball. And my company is called Sequoia Tax Associates. That's my website, sequoiatax.com. On the website, it describes the services I do: tax preparation, business setup, business services, planning, and also tax debt resolution. So those are big things for me. I do a lot of work in QuickBooks. There's other systems too. If you have a preference, I like Intuit products. They're pretty solid. And they work on them all the time. So they keep getting better. If you go, I have a Facebook business page for sequoiatax.com. I post a weekly tax update on both Facebook and LinkedIn. And you can sign up for a monthly newsletter if you'd like at the website or give me a call. My email address, michael@sequoiatax.com, real simple. My phone number is 669-293-0593, and that is local San Jose, even though it's a new prefix, but that's really a San Jose phone number. And you can go there and whatever questions you still have after taking a look around the website, you can hit the contact us button or just give me a call.
Perfect.
I'd be happy to work with you.
We'll have all of this in the show notes on the website too. Thank you so much, Mike, for joining me today. I really appreciate it.
Very good. Thank you too. Bye-bye.
I hope you found my interview with Mike to be educational, especially if you're just starting out. As I mentioned in the intro, your finances and taxes are important, so treat them as such. Laying the right foundation in your business from the get-go is going to ensure that you are set up for the future. You're in charge of it. So arm yourself with information and reach out to Mike if you need some guidance. As always, friends, stay safe, stay healthy, and stay happy. I'll talk to you next week.